Netflix has amended its bid for Warner Brothers. The streaming business initially agreed to pay $27.75 a share in cash and stock. Is now offering payment entirely in cash, American dollars, of course. Here to talk about that, Julian Klymochko, founder, CEO, CIO of Accelerate Financial Technologies. Thanks for joining us today.
Hey, thanks, Morella, for having me.
So this deal puts Netflix in debt. Do you perceive the cash offer as one that was needed, since the board already supported the offer Netflix had on the table before?
That's a great question, Morella, and it just continues this saga of the Warner Bros. Discovery Netflix storyline, and you also have Paramount Skydance in the background with a hostile bid. So what happened here was initially Netflix struck a friendly deal to acquire Warner Bros. Discovery, and the consideration was $27.75, made up of $23.25 cash, and then Netflix shares worth $4.50. However, if you look at Netflix share price performance since then, it's dropped. It's been under pretty significant selling pressure. So with that, it's traded to the bottom of the collar and was no longer worth $4.50. So what this amended merger consideration does, it effectively makes it worth $27.75 again, which was their initial deal consideration. So it's not an increase in price, it's just getting to where they used to be. And there's a couple reasons why they did this. Number one, with their consideration worth less and less seemingly every day as Netflix shares traded down, the hostile bid at $30 cash per share from Paramount Skydance looked more appealing for Warner Brothers Discovery shareholders. The other aspect is that share consideration initially, that creates just more paperwork and more administration. And this straight cash offer, plus the spinoff, of course, it makes it slightly easier, but ultimately it's not really a step forward. It's really just getting to where they were prior to Netflix's share price trading down.
Okay, so a couple of things. You mentioned the prices, the share price going down for Netflix. I take investors don't really like this offer. And I know the Warner Brothers offer expires midnight tonight or by tomorrow. Do you expect a new offer by them?
Yeah, so the Paramount Skydance hostile takeover bid at 30. I'm highly certain they're just going to extend that. Listen, this is a takeover battle that is going to play well into 2026. Both of these proposed transactions have, quite the regulatory path to follow just to get approval. So this is not going to be a quick process. It'll be fairly drawn out. I expect probably higher bids from at least Paramount Skydance, if not Netflix. So I think this story is still relatively early on, and there's going to be a few more chapters written here.
Okay, I've got about a minute left. I was just wondering what you expect from Netflix reporting after the end of the day.
Yeah, so obviously Netflix's share price has been under a bit of pressure here amidst this takeover, and they've never been much for M&A. They've primarily grown organically. So shareholders are a bit upset regarding this change in strategy. As for their quarterly results, it could result in a bit of a relief rally here if performance beat expectations. Historically, Netflix's stock has been fairly volatile around quarterly results. That said, over the long term, one of the best performing stocks. They have a lot of growth left in the name. So I expect directionally could be positive. It really depends on kind of how they stack up versus street estimates. Obviously, not the best tape today, but Netflix's stock outperforming the market just on a bit of relief that they're no longer issuing shares, something that upset shareholders. But I think ultimately for Netflix shareholders, if they were to lose this bid for Warner Brothers, then it'd probably be for the best.
All right. Julian Klymochko, got to leave it there. Thank you for joining us. Appreciate it.